All right, welcome back to another episode of the Black Bullion Show for goldandsilvertoday.com. Check that website out, guys. Recently, Ray Dalio has been in the news regarding his penchant for gold and his recent selling of 20-year treasuries via his hedge fund, Bridgewater. Well, guys, he's back in the news again, professing his love for old Yella. But before we get into that, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit that like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. All right, so Bridgewater on gold. It's wise to hold some of what central banks can't create more of. And boy, do we know a lot about this. Remember, that's at the core of why he got rid of his treasuries. In order to buy more treasuries, dollars have to be printed by the central bank. And if that printing is reducing your real return on those treasuries, can't knock anyone for wanting to dump them, especially the ones that are producing a negative real yield. Now, what I mean by in order to buy more of treasuries, I mean the Fed. So let's get into this. Gold is not too expensive, and it is not too late to get in. The Ray Dalio-led hedge fund Bridgewater Associates LP said in its September report. In a world of ongoing pressure for policymakers across the globe to print and spend, zero interest rates, tectonic shifts in where global power lies, and conflict, gold has a unique role in protecting portfolios, said the report titled, Some Perspective on Gold in the New Paradigm. It's wise to hold some of what central banks can't create more of. The key point the hedge fund makes is that gold's rally to $2,075 an ounce this year was in fact quite modest in comparison to the precious metals' past moves during reflationary periods. Gold has rallied 30% year to date against the dollar and a comparable amount against other developed world currencies, buoyed by fiscal and monetary stimulation of a magnitude unprecedented during peacetime, Bridgewater said. These are classic reflationary dynamics that more likely than not are still in their early innings. We've had a few such periods of extraordinary stimulus over the past century, all in times of economic depression, conflict, or both. And in all of them, gold saw triple-digit rallies that dwarf its recent run-up. This could mean that gold has a lot of upside potential before this bull market is over, according to the $138 billion hedge fund. The consequence of reflationary policies is the devaluation of paper currencies and an environment where gold thrives. These dynamics were manifest in the triple-digit run-up in gold during QE1 and QE2, and we've begun to see them at work today, Bridgewater pointed out. Gold is one of the few assets that can protect investors from currency depreciation, especially during times of massive money printing and 0% interest rates. Paper currencies are offering the worst deal ever, providing little incentive to hold them relative to gold. Given how much ongoing printing and spending will be needed, and given that replacing lost incomes is inherently more inflationary than replacing credit, as it doesn't replace the supply those incomes were paying for, we could very well see inflationary pressures mount while the economy remains weak, the report explained. And man, do I love how he rightfully compares gold against currencies in that last paragraph. Remember, gold and silver are money. So without saying as much, Dalio basically made the alternative case to paper currencies, which is hard metal. And again, this isn't exactly the first time Dalio has shown a light on gold in recent months. Q2 report from 2020 showed that he converted his paper fiat for the real thing. Though, mind you, it was in the form of GLD. But remember, many hedge funds are choosing this route to gain gold exposure, so it's nothing too unexpected here. But let's get into it. Just going to read this quick highlight. Bridgewater raised its holdings in the SPDR Gold Trust from $600.6 million to $914.3 million. That's close to $1 billion, guys, making it one of the largest investors in the fund. According to data from Bloomberg, the fund's holding in SPDR is now its second most valuable. The company increased its holdings in the iShares Gold Trust from $176 million to $268.4 million. This investment is now Bridgewater's sixth biggest stake, up from ninth the previous quarter. So remember, guys, during the month, or September, where everyone seemed to forget about gold, Dalio released this report in September, speaking volumes regarding gold's long-term potential. So just keep that in mind in case you ever feel kind of, like the weak hand, so to speak, and wanting to sell. Just remember that. All right, guys, thanks again for watching. Please hit the like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.